What if I told you you could turn this $100 into $4,000 a month? I know I wouldn't believe me either. And if you told me you were going to deposit this into a trading account and flip it into $4,000, I would tell you that you are crazy. If you've ever tried trading with $100, you know how difficult it is, and you know how unrealistic it is to actually generate substantial returns on $100. But in the modern era of 2024, with the competitive landscape of prop firms out there, it is actually possible to do something completely crazy, like take $100 and turn it into $4,000 a month. Now, the first thing I'd like to do is clarify that when I reference a prop firm or a funding company, I am only referencing the companies that deal in futures markets. There are companies out there that deal in Forex markets, but in my opinion, there is no reason to gravitate towards the Forex side, especially as a US citizen. There are Forex companies out there that offer prop firm services based around an instrument known as CFDs, contracts for difference. Now, if you're a US citizen, it is actually illegal to trade a CFD. And since these assets are not regulated by the CFTC, those prop firms have much more access to manipulating their conditions, slippage, and overall creating an environment where traders are not able to succeed. Because the futures asset class is regulated by the CFTC, futures prop firms do not have this ability, and they ultimately provide traders with significantly more quality conditions, allowing them to actually have a chance at succeeding. If you are going to use a prop firm or a funding company, I personally don't see a reason why a US citizen would choose to use a Forex company versus a futures company. The landscape of Forex prop firms is also crazy right now, with rumors of traders being denied payouts, shutting down at every corner. Meanwhile, the three major future prop firms, Apex, Topstep, and MyFundedFutures, have had no issues, and I personally have not heard a single report of a trader being denied a payout or wrongfully terminated. Now, before I dive too much into the details of prop firms and the blueprint you are going to use to turn this $100 into $4,000 a month, we first need to talk about the two main components of how you're going to succeed at trading as a whole. The first is trading psychology, and this is way too thick of a conversation to cover in a short video like this. So what I'm going to do is link you down below to some of my most popular trading psychology videos, and make sure that you have watched those thoroughly before coming back and finishing this video. Now, the second major component in succeeding as a trader, besides your trading psychology, is some sort of technical edge in the market that allows you to identify opportunities on a chart and take advantage of them. For me personally, my strategy is based around three core pillars: level analysis, candle analysis, and trend analysis. If I'm able to combine all three of those pillars and look at each one of those parts of analysis when diving into a chart, I usually will have a pretty good idea of what is going to come next on that chart. Now, those three pillars lead me directly to my 4 rules. The first of which is, with every trade that I take, I look for a level or the opening print as a reference point on that trade. Having a level or the opening print as a reference point allows me to more confirm what I believe is going to happen on that chart, which leads me directly into rule number 2. I like to be trading with the trend on whatever primary time frame I am managing that position based on. Rule number 3 for me is that whenever I am entering a trade, I will not do so without a proper trigger. For me, my trigger comes from my entry bar and signal bar system that allows me to take an entry with a 1 candle stop loss. Now, my fourth and most important rule of all is the multi-time frame confluence rule, essentially confirming that I want all of my time frames to be aligned with each other. I'm not saying that all of the time frames have to have the exact same trend, but they have to be in alignment with each other so that my thesis or general idea on that trade isn't completely out of left field. With those 3 pillars, level analysis, candle analysis, and trend analysis, combined with my 4 rules of using a level or the opening print as a reference point, trading with the trend, waiting for a setup to trigger, and having multi-time frame analysis play a role, the vast majority of the time when I am looking at a chart, I am able to accurately identify trade opportunities. Whether they work or end up failing, I'm able to find good trades. Now that you have your trading psychology down and your trading strategy down, it's time to create that specific blueprint so you can turn this $100 into $4,000 per month. Now, the reason that I prefer MyFundedFutures over a company like Apex or TopStep is because they have a few specific rules that I believe greatly benefit the success that traders will have. Apex has an intraday trailing drawdown, which means that you could be in a winning trade, but if it pulls back far enough, you could end up losing your account just based off the intraday unrealized trailing drawdown. In my opinion, if you can blow an account when a trade is still working and you aren't even in actual drawdown, that's a rule that is in place for traders to fail rather than succeed. Now, while I do like TopStep's rules more than Apex, I don't like the daily loss limit that they have, and I don't like that you can't use the equivalent amount of micro contracts so that you can scale out of your positions. Because of those rule differences, I do believe that MyFundedFutures genuinely has the rules that give traders the most opportunities to succeed. And if that wasn't enough, it also is downright the cheapest prices in the industry at the moment. Now, I don't care which prop firm you use, and if you have a preference of Apex, TopStep, to me, it really doesn't matter. However, for the purposes of this video, I want to explain how you can take this $100 with MyFundedFutures and turn it into $4,000 a month. Now, here's the blueprint that you've been waiting for. When most people purchase a funding challenge, for example, a $50,000 funding account challenge, they think that they are buying access to a $50,000 account, when in reality, what you are buying access to is $2,000 worth of drawdown. And that makes sense. They're not actually giving you the entire $50K to win or lose. They're giving you a buffer point of $2,000, saying that's the absolute max that you can lose. So now that we understand that you aren't actually buying a $50,000 account and instead you're purchasing $2,000 worth of drawdown, it's important to define both a conservative and aggressive approach to becoming a successful future prop firm trader. Now, in this blueprint for the conservative approach, I want you to treat your prop firm futures account like you would a personal account, risking 5% per trade. Now, what the hell? 5% per trade? That seems like an extremely high risk. And you're not wrong. That is a large risk. But remember, we are not basing that 5% off the overall account value. We're basing that 5% off the total drawdown that you have access to. So if you have access to $2,000 worth of drawdown on a $50,000 prop firm account, that means you should be risking $100 per trade. Now, the fascinating part about this is that if you do the math and determine how much risk on each one of those trades is it actually costing you, it comes down to a total of $5 per trade. What that means is that you are risking $5 of how much you spent on that challenge for that trade. And in my opinion, you cannot get more conservative than $5 of risk. If you were to fund your own brokerage account and risk $5 per trade, there's no way that you would make more than $10 or $15 on a regular basis. However, if you leverage that $5 and use it while trading a futures prop firm, it's possible to generate returns north of 4 figures in a single month. Now, building this blueprint, let's assume a couple of basic things. Let's assume that on all of your trades, you aim to make 2.5 to 1 on what you are risking. I know that number is a little bit high and some futures traders have a smaller number, but to counter this, I'll go ahead and say, let's assume you have a win rate of 50%. If you take 20 trades over the course of a month with a 50% win rate and a 2.5 to 1 risk to reward ratio, risking $100 per trade, you're going to be left with 10 losers and 10 winners. Those 10 losers at $100 per trade would cost you $1,000, but those 10 winners at $250 per trade would make you $2,500. That would leave you with a delta of $1,500 of profit per month, all while only risking 5% of the funded account's drawdown and only $5 of the money that you invested into getting access to that account. I personally am an advocate of less is more. So let's say that you only took one trade per day over the course of those 20 trading days that month. A net profit of $1,500 on a 50% win rate is pretty dang solid considering you only invested $100. Now, while I believe that most of you out there should be using this extremely conservative approach when trading a prop firm challenge, I know that the vast majority of you also will want a little bit more leverage and the willingness to risk a little bit more per trade, which is why there is also an aggressive blueprint in how you can generate $4,000 plus a month from one $50,000 account. If you start with a $50,000 prop firm funded account and risk $300 per trade, aiming to make 2.5R, a 50% win rate will still leave you with a net $4,500 profit at the end of 20 trades. Again, being an advocate for less is more, if that took place over a month, winning 10 days, losing 10 days, losing 3,000 on your losing trades, and making 7,500 on your winning trades, the delta there would leave you with a profit of $4,500 on just one $50,000 prop firm account. Here's the scary part though. If you risk $300 per trade, you only have 6.5-ish chances before you could be completely blown out. And it is possible that based on your trading strategy, you could lose the first 5, 6, 7, 8 trades in a row. Personally, this isn't something that I've experienced, but it is entirely possible. And that's why the more aggressive approach is exactly what it sounds like. More aggressive. Yes, with the aggressive approach, you might be earning more cash, making it quicker, and it might be feeding your dopamine a little bit more. But the reality is risking $100 per trade on a futures 50K prop firm account with a conservative approach could still yield you a net of $1,500 per month in profit. At the end of the day, you can choose any of these 3 major and reliable futures prop firms out there. However, make sure you have some sort of blueprint implemented so that you're not just spending on challenges and you are consistently withdrawing from the funding companies.